This is London with Bitcoin Spike. Hope you're all doing well. We're going to go over Bitcoin as usual. We will go over the markets at large. And this is essentially for our VIP. I'm a former hedge fund owner, private, non-SEC, not financial advice. This is our headquarters 2023. We're excited to be in HQ and welcome you in terms of the essentials. We, guys, hope that you follow New York Institute of Finance. All right, that's where the real answers are in the market. We're going to go through some details on Bitcoin. I will zoom in. Let me make sure that we have everybody in the, let's see, we have in the stream. Let me make sure that the VIP from our Slack, that's where we trade in the back. And I want to encourage all of you to make a mark in the market, okay? Make your mark in the market, okay? A lot of people have been in the markets a long time, and I don't see them with too much to show. So let me do a little bit of a quality check here, and we'll talk about the way that you make your mark in the markets. Okay, we'll talk about that in a little bit here as we get through the technicals. Want to make sure real quickly that we have everything plugged in. I see a few guys in the room. What's up, guys? Nice to see you. Nice to see you. Let me see here. So. Yeah, I see, and I want to encourage you all because I see a few people in the markets that have been in the markets a really long time and don't have a whole lot to show for it. And I want you to schedule out kind of your goals, your framework, what you would like to do. If you want to make $1 million, what's the most feasible way for you to make $1 million? If you want to make $1 million trade that lasts for 2 or 3 or 4 days, weeks, months, right? Some $1 million trades last years, okay? You know that. If you want to make, we've had VIP who've wanted to make, and their goal was to make $1 million in a day. And we did that back to back. Shout out to all those VIP, current and past. Hope you're doing well. And let's dig into the charts a little bit. Let's take a look at kind of what we're looking at on Bitcoin. I wanted to stream because we're at that 20 moving average. I want to see if I can do this a little bit. Let's see if I can put your pictures up, by the way. I hope you guys like that, to put your pictures up. And I'm probably going to mess all of this framework up. Order move to the top. I don't know. There we go. We actually did it correctly. Miracle. Miracle, guys. That actually works. So we've got pictures which should be streaming through you guys on the bottom right. I'll move me up here to the top, and we'll go through the technicals on Bitcoin just a little bit. We're at the 20 moving average on the daily. I want to make sure that all of you understand what's the importance of the 20 moving average. When we look at the 20 moving average, it's the midpoint of the Bollinger Band. Bollinger, guys, it may be as boring and as irrelevant as the Imuchu cloud. Okay, Imuchu cloud. I'm not that, or if you're into, or you like, or you don't, the Keltner channels, or you don't. Let's say you are into envelopes, or you're into retracements, you're into throw the kitchen sink in terms of what all the possibilities would be. The Bollinger Bands just happen to be one of the most well-respected, I'd say institutionally. If you look at the Wall Street traders, et cetera, they're all going to know what Bollinger Bands are. Look at your New York Institute of Finance. You're going to see Bollinger Bands. It's front and center, right? There's going to be trade tactics associated with those Bollinger Bands that are recognized by Wall Street, right? Not a gimmick play, not anything else. They're going to be recognized by Wall Street. You see that we opened up, and I put a quick video out that we opened up underneath this 20 moving average. This is highly relevant. It's a point of interest. A lot of you may use point of control, VWAP, etc. What do we got? Hey, Venus, what's going on? Nice to see you, Venus, in the house. Way to trade, Venus. Very nice to see you, as always. And shout out to VIP if you guys are in and around. Let me know in the chats. Give me a shout out, and let me know if you guys would like anything specifically covered. But when we're dancing along kind of the line here, just understand, we opened up underneath, and this is what this is going to look like. We opened up underneath the specific 20 moving average. It's a level of interest to the extent that if we close below this 20, okay, we've got a day to do it, right? We've got until tomorrow around this time to decide, for the market to decide if we're going to maintain this level of interest. Orders were parked at this level. You saw it flex a little bit, right? And by flex, I mean push below that 20 moving average. That's not uncommon whatsoever. You need to have some tolerance as you look at, obviously, your specific orders when they're getting picked up. How much threshold of pain do you have, right? Typically, if you're overexposed, you're not going to have much threshold at all. You're going to be sweating. You're going to be hurting inside, right? You're going to be watching it, and every second's going to seem like it's a year. You guys know that feeling, right? Absolutely. So this is the deal. If you're in that scenario and you picked up on the 20, if you're lightly exposed enough, right? There's no cataclysm involved in your specific trade tactic, okay? In terms of the amount that is involved, you can let it ride a little bit, okay? Shout out to anyone who caught, and a few of you caught some shorts on our capital line. What is our capital control line? Capital, i.e. capital, cash, margin, interest level that you have in your trade, the amount that you have in your trade. You see this red and blue line. Now, that came from our Z-Pack Bollinger Band. The red and blue line is literally, it is RSI, MACD, and stochastic. That's it. That's it. It is a combination of those, a kernel combination. So that's the magic in terms of the capital line. It's just RSI, MACD, and stochastic, as well as we can assemble them, as well as they can be assembled. And you'll see that we fell into this specific, let me look at the, that's CLP, that's fine. You can see that we fell into this short zone here. Very important that I cover this with you all. When you receive a short on your capital line, when you get that, and you guys know this is London, former hedge fund owner, private, not SEC, not financial advice. When you look at your capital control line, okay, you're going to see a tendency of price to want to hit back up into your capital line, okay? This red and blue line. Again, that's RSI, that's MACD and stochastic. So if you're going to be the type of trader that's just going to say, "Ooh, I got a short signal, all in, let's go, all in." No, you're going to have to pinpoint and work on your entries. You got the short signal here with the transfer over to the red. You guys know that. So after that occurs, start to look at the capital line for some interactions, possible interaction. You'll see as you backtest this that it's a very, very good tool to use. And you'll see a nice hit here, boom, to the downside. You'll see a secondary hit that we went up to this morning early and just cranked back into the capital line. That was the level of interest that got hit. So that's to your advantage to pay attention to that, and also they're in line with as well. We're going to say, and I bring that capital line up for you guys. You're the only ones that have access to that, okay? So we can sing it home to the races in terms of telling everybody. And by the way, I have not been, for the majority of my life, I haven't been the type of person to go ahead and just let secrets out. I have an advantage, we have an advantage, let's just tell everybody about it. I am so not like that, guys. Just so that you know that, I'm just not that way. I've never been that way. And part of some testing with computer science, et cetera, I've sat in large rooms of capable people and sat there and just thought, okay, so all these people are going to program computers. I'm going to program and write a program myself, and I'm supposed to generate and deliver the best program code that I can as a part of this to this person or to the professor, to all these people. I never was on that boat, guys. I just wasn't. So in terms of the advantage that I want to give you in my group, just understand that I'm geared that way. I have been for a long time. All right, and that's important for me, for you to know that, because I'll get a quick video out to whomever it may be, but the core group that we have, I want you guys to enjoy the privilege of the fruits of the hard work that we put into, and that I've hammered my time and effort into, such as the capital line. All right, and so when it's something, and it's okay, that's a benefit, that's a perk of being VIP, I want you to know it's a little bit past a perk for me. It's a little bit personal, okay, because I don't want everybody to have the advantage that you have in the market. Certainly not the advantage that I have in the market or that you have in the market for being in my or our trade group, okay? Understand, it's your trade group, it's my trade group, and it's your trade group because you're in it. It's my trade group because I'm in it. That's the way I look at this. And the advantage that you get in we'll talk about this a bit, the advantage that you get in an indicator suite. Understand the ones that are the most popular, they get degraded. They just do. To an extent, the ones that start to encourage crowded trading, it's just that alpha in there, that alpha, that advantage just starts to just think it's like a bridge that can only hold so much weight, okay? And you just think, and everyone's going to sit and advertise. Here we go. Everybody get on the bridge. This is the way to the other side. Like, hold on, we have a max limit that can go on this bridge, sir. It's going to collapse. All right. So think in terms of that, in terms of your advantage. This is a special route, in terms of that has been crafted for VIP. And I want to encourage you guys just to know that at the core level of everything that I'm doing, in terms of the additional work that I'm doing for VIP, the additional indicators that we're doing. And this is kind of a nightly powwow, kind of a huddle that we put together so that you know. And there's J Mac. What's up? What's up? What's up? Hey, J Mac, nice to see you. Nice to trade, my man. Way to trade. Nice to see those trades. Boom. And I throw it on the table a little bit like this for you so that you understand kind of how I am, what we're working on as well, because otherwise I'm not going to get it out in a 2 to 3 minute video. You know that. That's going to maintain and keep attention. This is the type of stuff that we just need to talk about so you understand more about the group, more about me, and more about, hopefully you guys in the future as we look at how to grow things, and that's it's going to be interesting. It's the more time you spend in the market, the more I'm going to say the better that you're going to do, and you're going to do better when you see. This is something that we need to work on the next year. You're going to do better when you see not only tactics, et cetera, presented to you that who's going to have an idea that is over or under the 20 moving average that the New York Institute of Finance teaches all the BlackRock, all the from JP Morgan to Morgan Stanley to all those guys, okay? Citadel, right? The New York Institute of Finance, right? The materials I cut my teeth on at a very young age, that those are, who would think, oh, so they're taught and they're going to look at over or under the 20 moving average on the top side of the lower side band. Oh, okay. That's not information that is commonly available. You guys know that. So part of the tactics that presentation to you is so that you can manage yourself in the markets better, clearly. The other thing that we'll get into, and this will happen, I'll just tell you that this will happen over the course of the next 12 to 24 and 36 months. I hope not beyond. I hope not beyond. But you need to start to see some things in the market that are, and some specific trades, and we'll work on how to present this to you. I'll work on how to present this to you well. But when you're exposed to different trades, and this is as best as I can tell you guys, it's not just, what's the next direction that it's going. You'll see some returns that I've had or we've had, some of you that you have had, and it's like, well, man, that's 20 times your money. Man, that was 75 times your money. We'll get into some that are like, man, that's 150 times your money. Literally every $1,000 turned into $150 or $200,000. Like, sign me up. That's what, we're going to need to see, and just trust me on this, guys. If you could prove it otherwise, great. As we're picking up on the 20 moving average on Bitcoin, wanted to come live just so that we could talk about this through this moment because we opened up underneath, and I didn't want to leave you guys hanging at all. We're in on the daily, and the daily is kind of like a master time frame. Just regard it as such. It's a master time frame. That's it. Okay? A pattern on the daily is more likely to play. Master time frame. It gets that reputation. It's earned it, right? It's regarded as such. The 4 hourly is also of that cut of the same cloth, essentially, in terms of how it's regarded. We're at a preceding small hitch pivot here to the left. It's on Bitcoin, noted, right? We have to note that without a doubt. Bitcoin loves to pull traders back down to any preceding hitch or pivot to the left. Anytime that we see a pivot or a hitch to the left, really on anything, right? We are prepared to go back down to that specific level again, boom, and retest it. Always be prepared as such. On the micro, get back quick if we can. On the macro, boom, and in line again, right? Just levels of essentially demand. It's buyer interest, preceding buyer interest that is respected once on the way up and pushed up, and buyers decide again, well, I'm going to park it here again. I just made money here last time. Let's park our money again at that level. So it's a respected level of demand or buyer interest, bottom line, or long interest. So in terms of where I wanted to catch up on the 20 moving average very quickly. I want to shout out to Izzy's our new VIP too. I don't know where Izzy's at. Izzy, there's a link, I think, in the description. If you can hit that, I don't know if Izzy's around, but maybe he'll catch this later. Hit that link, get in touch with me. Best you can, I'll say that. You can do it through Twitter or otherwise, and that will be good to get you involved in some of the advantage. I like the bridge analogy. You guys appreciate the bridge analogy? Guys, when you're looking at something and it's like, whoa, everyone's going to make the money. Whoa, everybody. And I think about this, and I don't mean to be sarcastic nor overly let's say overly fault finding. I don't want to be overly fault finding, but the fact is the majority of the traders on the internet are losers, right? They just are. It's the way the market's built. It's not anything. It's not derogatory for me to say that. The majority are just going to lose. They're going to over-involve themselves with capital. They're going to take that rush invitation to the bridge, and the bridge can only handle so much weight, and the bridge, boom, 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 is going to collapse, guys. That mentality, and you would say, well, you know, it worked on the meme coins. It worked on GameStop, didn't it, huh? Big time. So, and it's that type of mentality that you look at to say, okay, so we can run a short interest dry. I guess we can run a short interest dry. It's just when you look at a crowded, I'd say a crowded trade, reflexivity, or orchestrated trades, typically over time, it's not going to be, and that was quite an event. You guys will recall the GameStop, right? We had some successful, very, very, very successful. I don't know if you guys were around back then. Nailed it. I mean, the top, boom. The drop, bam. GameStop, hello, right? And it's interesting at times like that because people were wondering what and this and that, everything else, and GameStop was literally just an uppercut knockout in the first round. Bam, champ on the ground, see you later. Was a nice hit. We killed that guy. So in terms of that, differentiate as you would look at a popularized answer, and in terms of whether or not you're looking for that commonality, at least maybe make a distinguishment in terms of commonality. Is there a rare circumstance that you could be a part of and involved in? And I'm discussing this in a specific context tonight so that you can understand something. When I talk about what over the next 12, 24, 36 months, that seems like a short amount of time, doesn't it? Next 36 months, watch the market, continue to trade. You'll see how quickly it can go by. But as I look at that, part of it's going to be the tactics that you're deploying in the market. Part of it's going to be this 20 moving average pickup, okay? The other part of it is going to be being exposed, not to just manage futures and some other issues, but seeing how some of these trades will work out. And I may need to present some of my own trades a bit more, okay, in the context of showing you some sort of jaw-dropping, oh my gosh, you have to get exposed to, and I'm telling you guys, I'm not saying this egotistically, if you can do it, but not everyone can, it's not that you can't do it, it's that you haven't done it. And once you've done it, you can understand, managed futures can get you there, will get you there in terms of placement of an opportunity. And managing, I'll just say managing your futures or your trades correctly. That's it, okay? Not complicated verbiage. Big roadblocks start to occur when people don't understand the common phraseology or the expected terms in trading, right? You'll hear something and typically, you know, when you started trading, it's like, man, that's too complicated. That guy went to one extra class of calculus. I didn't go to it. I just, let me stick with what I know. You stick with what you know. It's not always easy to just involve yourself. We talked about weak hands. Those weak hands in the market are what? The guys who can't hold on? No, weak hands are the guys who don't want to pick up a book with all the answers. I want to tell you guys, those are the weak hands, okay? And so talking about the progress that you have to have, I'm going to tell you guys, you guys are so close to it, you have to have it. It's not, I want you to have it, boy, I really want to charge you up and get you excited about it. You have got to have it, guys. You're so close to, and I'll just tell you guys, because you're already trading well, you already understand the basics, the ins and outs, but there's an extra 5% that's there in terms of the experience in the market. And if you don't see it actually achieved, and there's not with some degree of repetition, you're not going to be able to internalize it and repeat it, okay? Some of you guys know this because you started off with 100 rounds and you're like, man, look at that, 500%. Yeah, you guys know that, right? And you're like, well, look at that. That's 10x. That's 1,000% return. And you know when you started off on, you guys know this, when you started off on 100 rounds or training program, you know that it was like, man, I don't know about that. All right, now I'm not talking about 100 rounds, not talking about if we look at Bitcoin picking up on the 20, right? That's the reason we're streaming along, which is kind of a huddle talk. In the next 12 to 24, 36 months, I want to get you guys, I need to get you guys, it's not even optional. I want to get you guys to another level where you realize like, holy, good gosh, that's how this is done, okay, in the market. And you're going to need to see some of that. And it's not with, you're not gonna see it. Honestly, I've done all the research in terms of the market competition, et cetera. We want to call it competition, but in terms of the alternatives that you have available to you, I don't see that level anywhere. Okay, in terms of the appreciable impact that it can have on you in creating that level of ability in you to trade a certain way. I've been around big traders, great traders, number one traders, not just like, number one of a school. No, guys, like number one of like the desk of all the desks in New York and overseas, boom, right? So, or some of the heaviest handed, biggest guys in and around U.S. and beyond, guys, in terms of just knocking things out. Some of my partners, et cetera, that we've traded together. So what I'll say is this. I really want to, in the next 12, 24, 36 months, give you guys an idea of not just, and you've crossed that barrier with the start off into 100 rounds. You're already into, okay, I know I can 5X my money. I just need to catch the right move, right? I know I can 10X my money. I just need to catch the right move. I've brought up a few here recently with some, and that's 75 times your money. That's 150 times your money. The mindset that needs to get created from that is that you need to be shown how to do that. And not how to do it. I think you understand how to do it, but you need to actually watch it happen. And if you don't actually watch that happen, and this is where I'm going to come in over the next 12 to 24, 36 months, and I realize that you're not going, it's a skill set that you're not going to assimilate. You're not going to assimilate it without seeing it done a little bit more. And so that's going to be a big goal for mine as I talk about the advantage, and I tell you a little bit about, how I'm structured and not just giving away, let's say, an advantage on an indicator, right? That bridge capacity, the notion of the bridge capacity. And if there's another, I'll tell you, if there's another meme crush run, whatnot with GameStop or otherwise, some super, phenomenal kind of market restructuring event, that's a rare opportunity. We may or may not choose to be a part of it, depending upon the specific culture involved, or we may choose, I may choose, I just tell you that, I may choose in terms of whether or not to be involved with whatever that market dynamic is. And that'll be its own distinct issue. But aside from that, what's exciting is that there will be opportunities, and there are opportunities for you to equal those returns or surpass that level of return and market dynamic. So that's saying something if you, and I know that you already know this, because we're involved enough in the markets, and it's like, no, we can do a GameStop. We can make that happen. We can make a AMC. We can do that. Yeah. So I brought up the other day, and I'll go through the return figures on the launch of Bitcoin, what it was at 100x. Don't even talk about it. Don't even talk about what it was at 100x. Okay, the original, not the original. Let's say 2020, 21, the real big market run up. But my goal, and I just want to tell you guys this, is that I really want to be able to show you guys a little bit more of that, because you can work as hard as you can work in the markets. You can study the books, New York Institute of Finance. You can work on all your tactics. But unless you see that come around, you're going to be like, whoa, and you've seen some big hits earlier on in this year. You guys know, it's like you saw some, 30x, 40x. I don't know where we left the ball on that. At some point, I'm like, I want to see you guys run with this a little bit, right? Just like, that was earlier in the year. It's like, trying to get you guys excited a little bit to show you, to not to step it up, but I wanted to see, it's like, okay, this could be just about me or just about you guys. It could be about both, of course, but I want to see, let me say this. Tonight, I just want to introduce the notion to you. Continue to hammer home your tactics, okay? If it's Bollinger Band, if you've got specific, let's say, Fire and Ice just killed it today. Really did. And I know everybody's looking for a guaranteed deal, but like our Fire and Ice, man, let's look at this real quickly just in terms of, and this is just ours, guys. No one's got this. You know that. No one else has got Fire and Ice. It's a small list. I go on TradingView, And I have that list in terms of who's given access to this, and I kick people off of it. Somebody comes in, goes out, boom, you're gone. That's it. And they come back to me. You guys know this, need to know this. They come back to me and say, I never made that much money as I did with Fire and Ice. And they start to lose or this or that. And I bring that up in the context because we want something that's perfect. It's like we want to guarantee. The 4 hourly is nice, guys. It's a nice time frame to look at. I say that repetitively, but we slam dunked into a golden short today. I know we all wanted it to just rock and roll, huh? As we, to the upside. You do know and you understand the dynamic. And I talk a little bit about what I want you guys to see to plan things out in our huddle as we talk about the huddle, just us getting together. I want you to understand what I want to do to try and facilitate things for you to become, to leave your mark in the markets, all right? And some of the ways that I can do that personally, I can introduce you all, just like I did with 100 rounds, into you getting like, hey, I got 10 times my money. None of you, some of you may not have had that experience if you hadn't gotten into 100 rounds, hadn't gotten into the training. Some of you are finding much higher levels of success at all with at least this, buying lower, right? It's like Fire and Ice was built to ensure that you're buying lower on a green buy line. You're always directed towards buying lower, right? If you're higher, you're considering shorting. That's the bottom line. As the market unwinds after a big move, the biggest, let's say the oldest trick in the book that we continually see, and all the VIP know this, you will start off with a move, you will get a small consolidation, you guys know this, and it's what? And it'll be smaller than that, won't it? Let me redo this, make sure. I want to take off the background, because this is important for us to cover tonight, just in terms of tactics, in terms of preparedness for the market. After the market makes a move, danger zone is boom, we're up and we're out, right? Then what does she do? She makes this really tightly scheduled, perfect bull pennant, right? Danger zone. You know this, danger zone. Why? Because then she's going to pop up and out. She is going to get all the longs involved in this bull pennant, and then she's going to crush back down into it. And as she does this, then she's going to go down and she's going to build a small bull flag. And then boom, she's up and out. This is the second take she's going to do. And then she's going to boom, she's going to straddle back in through level of resistance, and she may formulate some sort of a flat top or other angled top. And that's move number 2, where she took from breakout traders who were overexcited about the move to the upside. I mean, not overexcited, naturally excited about the move to the upside. But the market is so good at capitalizing on that emotional push that it just gave you and the profits that it just delivered in terms of getting these micro, you guys know this, a micro reconsideration into what is literally move 1 of, if you had to move into 3, 4, 5, I'm going to tell you, you can do 6, 7, 8, 9, 10. Now the trick is here. If that's move 1, you guys know. And what would move 2 could have just been down through here. Fake out it down, then you've got a flag. Well, then the flag turns into more of a, and you just fill in the details. As you're expanding through this, as you're building from the micro, and I always say this, you guys hear me say this all the time, just be aware as you're looking at a micro consideration here, right? Be prepared, and here's a nice one, right? You got this specific move here. Let's look at this. You got this specific move here on the way up, right? There we go. You got this specific move here. Buyers got involved here. And now this did pay a bit, boom, to the upside. The problem is if you waited too late and you got in here, ba-boom. So you're about at a break even. We can go into, this is on the 4 hourly, by the way. So we can go into the hourly, 30 minute, 15 minute, 5 minutes. You're going to find in this level here, you're going to find that 1 through 10 nearly of what I just drew out in terms of the micro building into a bit larger. And as that expands and unwinds, it is take city. You guys know this. It is right and left take city from the traders who are still riding on that momentum, and the market's going to sit and just take, just literally just annihilate everything, guys. And what would you say? Maybe there's a I don't want to say a 2 in 10 chance. Maybe there's a 2 in 10 chance that the market decides not to do this. Yeah, we see this almost every time after a big move. Now, I bring that up because that is when your fire and ice just kills it. And there are ones in our group, there are traders, and they're only going to be in our group because they're the only ones with access to fire and ice, that consistently, while this unwinds at a new range, consistently, they're just going to clean up. You know this. Literally consistently in here, instead of trading all these breakouts, you're going to consistently just clean up. Yeah? It seems unnatural because, well, we're waiting, we're breaking out, we're waiting, we're breaking out. While you're in that, I just want to challenge you, and you know this, and I try to put it in some context. It's that micro to macro expansion with some relevance to the daily as we look at the daily and regard it as kind of the master, what we say, time frame. And it's difficult when we have upside targets that are incomplete, that are incomplete. When we have a daily, well, we have a daily target to the upside. We're at the 50%, and you guys know max fractional probabilities. You guys know this, maximum fractional probabilities is like, well, we're already at that max fractional probability. So as you learn to wine and dine and dance a little bit with Bitcoin or any coin, just appreciate this notion. And if you're losing in this zone, if we were to go to the 15-minute, if you're losing in this zone here, just understand, at least in the back, when I'm saying a macro or a micro pattern, right? When I'm saying that there's a macro, let's say a micro pattern, just appreciate the fact that, yeah, this was what? This was our first bull pennant, right? Move to the upside, symmetrical consolidation. We can walk this back through and even go down into the 5-minute, right? We can go to 5-minute. This is on the, what is this on? It was on the 15. But as you really start to dig down into all of these different time frames, you're just going to see more and more take opportunities from the market, and it's going to become more. We almost see it every time, guys, don't we? Once we've reached a consolidation range, that's our challenge. When have we reached the consolidation range versus when do we have a realistic chance of going up? And regard your higher time frames. Obviously, your daily, your 4-hourly, your 8-hourly. What was your 8-hourly today? Just another one. And so the 8-hourly did to us today what? Now, busted pattern? Yes, technically a busted pattern. You know, and he who is going to just say, well, that's good, it's going to break out on the 8-hourly, I'm going to short the breakout. Literally, you're going to have to be equipped with something. All right, now pattern identification, if you can find a cross pattern identification to assist you in saying we're going to maintain, and this is all about tactic, right? All about tactic and strategy. As we discussed this specific move here, what was our, as we look at this, our specific heads up kind of warning flare here. This expansion, we're not real crazy about these. Bitcoin hasn't been performing well on these expansions. You know that. We discussed that. What I would say is this. This is a great opportunity for you to get your handle and feel in the market. None of this may apply to you at all if you don't have the hours or the time, if it's less than hours or more, to spend with the market. Make sure, given that consideration, that you are, if you don't have the time to micro move, to either trade a breakout, fake out, or to micromanage your specific, and know that you can set alerts on your fire and ice. Big time. Get a phone call in the 5-minute. Boom, boom, boom. You guys know how effective it is on the 5-minute, on the 3-minute, in terms of exposure. If you want to grow your account from $10,000 to $1 million, you are not going to do it. Prove me wrong. I'd love to hear it. But you're not going to do it putting $10,000 in at a time. You're just not. You will learn to double your account if you go piecemeal, slowly. Get interested in the price action. Lightly involve yourself in a move. Now, unless it's a Tesla, macro, once a year style move, you know, if you choose to go heavier on something like that with your backup cash, etc., beautiful. That's a different scenario than it is with throwing around a large chunk guys, if you're throwing your account around, it's going to look like it. Yeah, very quickly. And I just want to reinforce that with you guys as well. So the bottom line is we see fire and ice continually. Let's just bottom line it. We see fire and ice continually perform well, don't we? Without a doubt. And I know that you are all trading it from the 4 hourly pickup lines on the Pro to the green buy line, to the Pro top line, to the 4 hourly golden short or ice cold shorts. At some point, that starts to interact with targets, which can smash through our fire and ice. So let's remember that, given the fact that it's worked so well right now, given the fact that we're on the tail end of it just being automatic, we're at a decent level of resistance here. We don't know that. We're at more than a decent level of resistance in this zone. We love, and shout out to Venus. I know Venus, you were just all excited about and I think J-Mac, you loved it too, the 200 weekly moving average, right? It's just nice. It's just on the map. Everybody's looking at it. If you back test that thing, you're like, give me a break, you know? It's like, should I not throw in, in? The account doesn't want to be thrown in at this level because you look at the back testing of it, it's like it almost wants to be thrown in, the whole account, whatever it is. Now, let's just say you have 10 accounts, right? No problem. Throw this one in there. But looking at that, just let's note that for right now, and what I would suggest that you do is take a look back at the intermediate intervals in terms of the pricing, okay? Take a look back at what types of moves, and this is very natural to do. You probably do it all the time already, but take a look back at the structuring, the micro patterning as we got in through this, right? Because these were fake outs. This was fire and ice in here, right? As you were to look at, and what I want you to compare is let's take a look at this real quickly. Take a look at the surface area. Just look at the size, all right? What do we got parked here, right? In terms of the size of the pattern. Typically, we like larger patterns, right? The larger the pattern, the larger the expected move. The nuance that we have with this dang quote unquote bull flag below is what? It's also a really nice wedge, right? So what's the target on the wedge? Technically the top side, right? You have to go to the candles. You have to get a little creative with this pattern. We have a very clearly denoted falling wedge here. You know that. To get back on point, to try and assist a bit in terms of, is this fire and ice zone or are we really going somewhere? Try and take a look at your preceding consolidation intervals. What is being expressed along the way to where you have a bit more, I'd say a higher level of comfort with what's kind of required before we make a move. What's required in here before we make a move? If I go to Tesla real quickly, Tesla was beautiful to the extent that and if you're into crypto 100%, pay attention big time to this. Pay attention and apply this to every coin you trade, okay? What did Tesla tell me and that I told the hedge room in the back, okay? Because this was a big deal, very big deal. Pay attention. Tesla told me when I did a look back, okay, after we had trajected up and met 100% of this bull flag, and this is a beautiful bull flag. I feel bad for anybody who missed it, honestly, I really do, because you don't get them like this, not on something like Tesla with all the great news and North American charging standard, all that good stuff, guys. So this was the deal, and you're going to like this a lot. You're going to apply this to everything you trade. Take a look at this. Boom. So we met the target. Now, I will tell you, the worst time in the world, okay? Now, the best time in the world to take, maybe here. To lock in your profits, no problem. Lock them in. You hit your target. Beautiful, okay? Amplitude move of the flag pole to the upside, downward sloping channel. We don't want an upward sloping channel. We don't want a pennant. We want a downward sloping, well filled out channel. Boom to the upside. Now, this is where things get interesting. Look at Tesla. Look at Tesla and do what I just did, present to you, and that's a good huddle for the night, guys, right? What did Tesla tell me? Tesla told me that of all the times that Tesla has had a rocket ride to the upside, okay? Now, the worst time to sell Tesla after a bull flag was where? Here. Dang it. The guy wants to make all the cash and he rides it up and he sells it here. What? And then he buys it back where? Here. No. What did Tesla tell me? Looking at Tesla, doing a back test. Now, I would call this derivative analysis, okay? Derivative analysis. I'm bringing and deriving from the past of the price action, okay? If I'm doing a derivative gain analysis, G-A-I-N, derivative gain, okay? I'm looking and deriving from the past what levels of gain we have had and how they may match up, okay, to the preceding gain events that we have had. All right? So that would be a derivative gain analysis, okay, where I would want to see and match up preceding gain events, right? This would be a different derivative analysis, but in terms of just saying back testing or looking back, no. I'm doing a derivative analysis here, and I want to know how many times lock and load, put it in the ammo case, promise me you do this, okay? We did in Hedgeroom, period. Were we surprised when price flew back to the upside? Absolutely not. Zero. Literally zero. We have rolls of tape in the Hedgeroom, in the back in our Hedgeroom, rolls of tape, all right? Saying what? Do not sell it here, right? Why? Because looking at Tesla doing what we just said on Bitcoin and looking at Tesla, and Bitcoin looks like it's doing decently on that 20 moving average. Congrats to everybody who picked up on that. Orders were waiting, right? Have a little flex in those orders. Absolutely, guys. So what Tesla told me, looking back at it, was telling us is after every move, boom, to the upside. What did it do? Let's set a topping pattern. Yes, it did. It set a topping pattern. Wasn't a one-off V-top. Okay. Up, topping pattern, up, into a topping pattern, structure to work with, up, topping pattern. Here, what was this? Up, topping pattern. You guys get this? Up, even in here, micro topping pattern, up, topping pattern. You guys got it. Up, here, topping pattern. Right? Up, topping pattern. A little bit difficult there. What I had, surmised here or evaluated, derivative analysis, looking at this, beautiful topping pattern, up, nice topping pattern. What does that mean? That means the market's going to take price up to target, probably going to wash some people out, and then do what? Provide you some sort of a topping pattern, at least. So when you're looking at the back, let's say preceding consolidation intervals, when you're looking at the chart, it's a huge advantage. And I'll tell you, we had a 20% chance of it not behaving well. Yeah. But we had an 80% chance. You back test it. You look at it. You do your derivative analysis on Tesla. We weren't surprised at all. I literally was sitting there, and if you would just look at the every other trader, guys, good traders, some of them, right? If you look at them, just to not be surprised by this move, boom. That's when you got it, huh? And you know it, like, yeah, we just talked about that. Well, look at it, and you can explain it to somebody, you can go back over it. Same thing on Bitcoin. So when I talk about, and we get into it's kind of the mystery involved, we've broken down from this nice 8 hourly to chew on for a minute, isn't it? Little bit, huh? God bless the USA and the 20 moving average on the daily, huh? Because you have to say, God bless the 20 moving average on the daily right now, because it's keeping this up. We have downside target of 29,714 based upon this, but we are flexing muscle on that, on the specific exact, right, on that exact 20 moving average. Didn't hit that 50 yet, so that 8 hours a little bit tricky right now. God bless that 20 moving average on the daily. So as we get into this question of consolidation versus we're going to make a move. Some of it's a busted pattern, and it boils down to a probability and a percentage. You guys know that. Some of it's just going to be a probability as such. But there is a level of diagnostic that can go into it, and just how I pulled that out for the Hedgeroom, been like, no, we got an 80% chance. You ask him, huh? It was 80% chance of getting back up to and having some sort of a topping pattern. You're going to learn to see this better the more you look at this, and it's not going to be so much of a mystery Can it hit the 20%? Sure. Being Bitcoin, can it do it? Yeah. But even just in terms of, okay, kind of a topping pattern. All right, so looking at topping patterns. And this one just draws my attention a lot, right? Because it did fill out. It did have a few busts and wiggles and this and that and call them zigzags, whatever you want to, until it really filled out more of a competent consolidation. Same here, right? Same here. So as you're going to assess this, some of it's going to be the time that you're able to spend with the charts, the time that you spend in the market. And let's see here. Let's see if I can pull. I don't know if I can. There we go. So I just encourage you guys. Once you've spent enough time with Fire and Ice, and don't just haul off and get into it and start throwing heavy cash around. You guys all know that. But look at the derivative analysis. Look back at it. Spend some time on the Tesla chart and be like, wow, so we knew it was going to fly back up to that preceding zone. That's a benefit of being in the hedge room. Bottom line, shout out, what's up? We're going to catch some other moves. I know it's going to be impossible for us to have, literally, you guys know this, it's going to be impossible with all of this, guys, and all this great stuff we've got going on, to include all this great stuff we've got going on. It's literally just going to be impossible for us not to have some just King Kong awesome trades over the next 12 to 24 to 36 months. I really want you all to leave your mark in the markets. I want it to be awesome. Just something else that you can, maybe in terms of the way that you can leave it. I don't want it to be stressful. I don't want it to be one of these deals where I just can't take this anymore. I just can't. I can't take it. It's like the girl on, remember the old movie Airplane? It's like I got to get off the plane. I got to get off the plane. We ain't going there, guys. That's not the way we're going to trade, right? It's got to be smooth. It's got to be okay. It's got to be, if you're worried about something like Tesla, hello, right? And I just knew, I was like, they're going to want to sell it right here. And I almost all but just like, raised holy, holy hell or whatnot about don't you, I don't know how else to really bring it to everyone's attention. At least lock in your profits, at least do this. Do not sell it when it goes down. I don't know how else to do some of this, guys, because if I just kind of casually mention it, Lord only knows what you're going to do. So if I get like that, it's because typically I have a very good inclination that something's going to happen. And it's not like, well, you just mentioned it, because I'll get it the other way. You just mentioned it casually. You could have made a point about it. I've been around traders for a while, right? So you guys are tough enough. So as we look at this, you want to take advantage of Fire and Ice. You want to take advantage of, let me say this. You want to catch these. Bam. Oh, yeah. You want to catch these. Boom. Right? You want to catch these. Boom. You got it right. And you want to catch these. Now, think back specifically right now, what I just did with Tesla, okay? Think back. Do you remember specifically where you were during these hits? Let me shoot. Yep. I knew that was going to get me. There we go. You want to catch these. Boom. You want to catch this. Bam. You want to catch this. Boom. This is a Bitcoin chart, right? Move up from the bottom. Move, right? This here. You want to catch this. Boom. This. Bam. This. Boom. These. Boom, 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 boom. Right? But this is cash. These are the trades that will make it, guys. They're big moves, right? As you start painting back and forth all through this stuff, and you start, just do this. You'll remember the ones you caught, right? You'll probably forget the ones that you didn't. You'll remember the ones that you caught. You'll probably, hopefully you remember like where you were, who you were with maybe, what you were doing. You'll remember it. You'll never forget it. And it's kind of unfortunate that you may forget the ones that you didn't catch. But I'm bringing this up in the context. These are big moves, guys. Look at the left. Hold on. Look at this. To the left. Huh. We got some work to do, huh? Come on, Bitcoin, huh? She likes to stay quiet, huh? She's still got good volatility. You know this. She's still got good volatility. We would not be trading her otherwise. Now, the issue, though, is look at this stuff, huh? Let's assess this. Let's look at this. Bam. Come here. That's a lot, guys. Boom. That's a lot. Now, we are making smaller strides, aren't we? AI, huh? Big time. So we got the BlackRock guys and the other guys and the other guys all putting together their ETF paperwork with the SEC guys. We got all that kind of flying around. We still have good volatility at 100x. 100x is pretty nice, isn't it? It is pretty good. A little bit more casual with crypto, right? The 24/7, 365, always open in the markets, can cut both ways. Up at 2 or 3 o'clock in the morning, and well, the market's open in, the market's open in 3 hours. New York, and wait, there's a payroll. Hats off to the payroll. I'll see you in 3 hours, right? Because you get to the point, it's like I need to catch everything. What we want to catch are clearly moves like this. Right? What we want to catch, and you will do very well. You'll do very, 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 very well once and then as you refine your tactics, boom, 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 and you catch these. We did a little bit of derivative analysis. I was talking with Venus directly, and Venus, shout out to you. Hope you're doing well. You got a workout tonight. What's up? Nice workout. Hope that worked out. In terms of the moves here, we have to look at this. We get to look at this, but this move was 40%. Here we go. 40% here. This move is 20%, 25%. Okay. So as we look at we do a derivative analysis here, and we can get more complex with it or not, but understand I'm interested in how much something's moving clearly. I'm interested in the time interval that it's offering me in between moves, right? I'm looking at 2 months between these moves. I'm looking at, here we go, a 3 months between this move. I'm looking at a 2 months between this move. I am looking at and this was good. This was 1 month we had, boom, boom, was nice, right? So right now, Bitcoin is offering major moves every 2 months, right? We've got some Tesla and some stuff. We got stuff going on. We're trading. But I bring it up, not just there are tons of, Fire and Ice how many times do we wind up saying this? It's like, well, Fire and Ice the last week, last 2 weeks, 3 weeks, or last month has been killing it. You've been annihilating it, right? So we can do the derivative analysis as well and look at whether or not there's more money in Fire and Ice or on these big moves. But the big moves just send you for a weekend vacation. If nothing more, just because, thank goodness, you caught the move. That's the issue. When I look at this, every 2 months or 3 months, every 60 days or 90 days, I got to get the move. I got to catch the move. We caught these moves. We caught this move. I remember where I have been literally on all these moves. Back to who I was with, literally across the table from me, on the phone, etc. Boom, 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 boom. Okay? If you haven't been catching these moves, make it a goal. You're around the right group of guys that are catching these moves. And we're not all just dollar cost averagers, right? We're just not all. If you are, that's fine. But there are ways to participate in the market that it's like having a intergalactic telescope down to the microscope, down to, all right, let's really figure out how to make money on these. And that's a great way to participate in the market. It's going to challenge you beyond what you can turn on a quick day course on how to participate in the market. It's really going to get you beyond, beyond maybe what you thought you were capable of, and that's exciting to me. So let's look at that 12 to 24 to 36 month time frame. Let's let the market offer us something in terms of the next opportunities. If you missed out on Tesla, hey, no problem. You bring me the next one. Telling everybody this, including the Morgan Stanley guys. I'm never going to let them forget this. I told their whole office here in La Jolla about, you think you missed it, guys. They have I bring it up, they have duties to their clients, because how do you look at a pattern like that? And I can say it to you, you guys are busy, whatever, they do this for a living full time. This is all they do. Look at things for money. Like how you guys have zero excuse, I say to them. So anyway, it's like, well, whoops, So, but the big guys miss it. Sometimes the big guys miss it worse. I mean, the big guys with big accounts, sometimes they miss it worse. So give yourself some latitude. Not too much, but give yourself a little bit of latitude on it. And we want to catch the next move. That does not mean that we are jumping up and down. Use your indicators. Cap line daily has been read. Capital control line, right? It's been read enough, and it's been read on cap line pack. Capiche? Just give it some regard. If you didn't give it some regard, give it some. Bulls challenged a bit, without a doubt, right? On our Z-Pack, right? All these names we got going on, huh? I can't wait. We're going to get Skywalker. That's going to be cool, huh? Skywalker's going to be awesome. It's going to be cool. Working all that stuff, it's got to be worth your time for me to put in front of you. Z-Pack is, Capline is. Yeah, it's got to be worth your time for me to put it in front of you. It has to be. So we saw a red cap line, boom, interaction with the 20 moving average. Beautiful, huh? Solid, huh? Understand when we get a red cap line, you can bust it to the upside without a doubt. Price can continue to go up and curl around that specific cap line, and the moving average can come and meet the cap line. It can come up. We see this so consistently. It's cool, huh? So, hats off to everyone who's making that possible in the markets. That would include you. And who knows who else? I have no idea. A lot of mathematics are involved in this red cap line. So, that's something to pay attention to. All right? If you're underneath something, if you find that you're underneath something and you've turned blue, pay attention to possible contact with the 20 from underneath. Do not get carried away with this on your lower time frames. Just don't. Unless you're really good at divergences, and you almost need a group set divergence for your counter divergence for your divergences. A counter divergence for your divergences, or at least a differentiated level of divergence to consider, aside from just the divergences you're looking at on your RSI stochastics and MACD, which are your cap line. Because you could also have your cap line divergence scheduled into your Z-Pack divergence. Now that's getting into the, essentially, I might want you to look at the kernel average instead of just the absolute volatility involved, okay? It's a little complicated. It doesn't have to be. It's just, there may be, some of you are really good, I shouldn't even have to mention, some of you are really good at your divergences. You know, when to pay attention, when not to. We ran into a few bearish up here along with the red cap line. Just pay attention on your cap line. I would encourage you to do that. So 12, 24, 36 months, we're going to have some hammer at home, and I got to impress you guys. Maybe stun you guys somehow, but I have to get it into your brains as to how some of this can work a little bit differently. And I know that you're already doing extremely well, so that's a really exciting thing for me to, I guess, purpose to do. That's a cool thing. So if you guys have any questions in the back or otherwise, you let me know. And yeah, this is London with Bitcoin Spike. And I assume all you guys are in the back. This is our huddle for the night. Appreciate you guys. We will talk to you soon. Take care. And 20 moving average on the daily. That's what we got. Where are orders parked below? The monthly. All right. Let me see real quickly. We are on the monthly up and over that 20 moving average. And what do we want to see on the monthly? On the 20 moving average? Ideally, we'd like to see it go directionally, right? We'd like it directionally to be heading up. We like to trade directionally with moving averages. We're not real big in general on saying, hey, we're over the moving average. Fantastic. Let's go long. And what's the moving average doing? It's diving down into the ground. So the moving average is literally at an incline, just hammering down through the crust of the earth and say, we're over it. You might be over it that way, but are you really over it if it's just going down, right? We like the average to be going up, all right? So you may push beyond it. Somehow you push beyond the thing that's literally going vertically down. It's like that's a start, right? But we like a moving average to be going up. Yeah, we like to participate with positivity. So mind that a bit as I talk about the slope of something. It's like, well, it's literally going into the ground. It's vertical going into the crust of the earth. Okay, so you push beyond it, this vertical, push down. But we like to see that come back around. Whatever you're looking at, if you look at the 100, 200, daily, weekly, etc., those are very well regarded levels that directionally trade in the markets, irrespective of over, under, this, that. People say, well, it's going up, so we'll go bullish. So levels of interest below, you guys know all the levels of interest. I can count on you guys to know that without going over it. But good job, guys. We got the cap line in the house. Hope you're all doing well. It's a pleasure to talk to you. And we'll have another huddle maybe tomorrow night. Take care. Thanks, guys. Talk to you soon.